Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FOSUN INTL interim report. FOSUN International Limited offers a diverse range of businesses and services across various sectors. These include health, pharmaceuticals, health products, medical management services, happiness, tourism, leisure, fashion, consumer goods, lifestyle industries, insurance, life and non-life insurance, underwriting, asset management, market investments, company investments, asset management, intelligent manufacturing, iron, steel production, new materials or production, capital investment, property development, retail, medical research, financial services, banking, digital solutions. The company also engages in various other activities such as jewelry retail, dairy product and wine manufacturing, and tourism. FOSUN International's stock price has increased by 39.51% over the past year due to several positive developments and news. The company's strong interim results for 2025, which showed steady growth in core businesses and a significant increase in profit attributable to owners, were a major contributor to this surge. Additionally, securing a USD $910 million equivalent sustainability-linked syndicated loan in September 2025 boosted market confidence in the company's future development. FOSUN International also received several ESG and reputation accolades, including an AA rating in the Hang Seng Index's company's sustainability ratings for the third consecutive year. The company's strategic investments and partnerships, such as the Asian Development Bank's investment in FOSUN United Health Insurance Company Limited, have further contributed to its growth. Overall, these positive news and developments have collectively driven up FOSUN International's stock price over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by overseas revenue growth, accounting for 53% of total revenue, robust performance in insurance businesses, particularly FOSUN Insurance Portugal, increased production at the Bajiacheng gas field, and improved mineral processing efficiency, approval and marketing of new products, including HANSIZHUNG, HLX22, and biosimilar of denosumab, HLX14. Revenue decline is primarily driven by decrease in mainland China revenue by 21.3%, decline in health segment revenue by RMB 9.7 billion, decrease in manufacturing segment revenue by RMB 1.3 billion. The financial performance of the companies under review has been mixed, with some experiencing significant changes in their net income and profit margins. Net income has decreased for several companies, including FOSUN Pharma, Yuyuan, Sheed Spirits, Hainan Mining, and Wansheng. In contrast, Henlius saw an increase in total profit by approximately RMB 3.8 million year-on-year, driven by growth in overseas products. BCP also reported a 3.5% increase in net income. Profit margins have been impacted by various factors, including one-off investment gains and industry adjustments. For instance, Yuyuan's net income decreased by 94.5% year-over-year, likely due to the impact of a one-off investment gained from the disposal of subsidiaries in the previous period. Sheed Spirits revenue decreased by 17.4% year-on-year, contributing to a decrease in net profit attributable to shareholders. Overall, while some companies have experienced significant declines in their financial performance, others have reported modest increases or stability. The reasons for these changes are varied and often specific to each company's circumstances. The company is generating positive operating cash flow, indicating a strong financial position. The data from various pages of the financial summary confirms this trend. Net cash flow generated from operating activities was RMB 1,134 million on page 16. On page 43, cash generated from operations and net cash flows generated from operating activities were both positive at RMB 16,535,991 and RMB 14,605,427 respectively. Page 79 further confirms that the company's operating cash flow is indeed positive. This consistent display of positive operating cash flow suggests a stable financial foundation for the company. The company's debt level has experienced a significant increase over the past year. According to the financial summary, the total debt level rose by 3.4% from RMB 114.1 billion to RMB 122.1 billion. Furthermore, the total liabilities increased by RMB 186 million, 116,000 905, and RM beat 170 million, 24,587 from December 2024 to June 2025. This substantial increase in debt level is a notable trend. However, the interest expenses have shown mixed results. While some pages indicate a decrease in interest expenses, others suggest an increase due to new debt issuances with higher interest rates. Specifically, total interest expenses decreased by RM beat 175,701, and interest expense decreased from 7193, 2024, to 47,9, 2025. Nevertheless, the overall change in interest expenses is not consistent across all pages. In conclusion, the company's debt level has increased significantly, but the impact on interest expenses is less clear-cut. The financial performance of various segments and regions within a company has been mixed in recent times. On the negative side, the happiness segment saw a decline of 21.9%, while the health segment and intelligent manufacturing segment experienced drops of 3% and 24.6% respectively. The asset management sector also suffered with an 18.3% decrease in revenue. In contrast, the wealth segment performed well, growing by 3.3%. FOSUN Capital's successful listing of 2 investment companies through IPO was a notable achievement. Additionally, new investments in AI and robotics, as well as intelligent manufacturing and overseas development, contributed to growth in certain regions. The manufacturing segment and asset insurance management also showed some improvement, although specific details were not provided. Overall, while there are areas that require attention, the company's financial performance is not entirely bleak, with some segments showing resilience and potential for future growth. Management is optimistic about the company's outlook, citing a decrease in net interest expenditures as a positive factor. The foreign strategy will continue to be implemented by FOSUN Pharma, focusing on innovative R&D and strategic product development. Other subsidiaries, such as Henlius and Gland Pharma, aim to enhance their respective businesses through innovation and expansion. FOSUN Capital will empower portfolio enterprises with business resources and industrial depth, enabling long-term value creation. The company also prioritizes risk management, monitoring and managing risks effectively through hedging methods when necessary. Overall, the company is committed to investing in property development and other assets while maintaining a robust investment strategy that includes indirect holdings of 91.03% of the target company's share capital. The company has demonstrated its commitment to returning value to shareholders through 2 key initiatives. Firstly, it has paid dividends, distributing a significant cash dividend of RM 159 million and planning to distribute an interim cash dividend of RM 59.69 million. Secondly, the company has also engaged in share buybacks, granting 149,519,200 award shares through its share award schemes. These actions indicate that the company is prioritizing shareholder value and rewarding investors for their loyalty. That concludes the financial summary for FOSUN INTL. Feel free to comment below, and I will be happy to answer them when possible.